guys, it's Carter. Welcome back to the channel. Hope you guys are all having a fantastic day today. Now in today's video, we are going to be talking about our $500 swing trading challenge. Now, this is a new challenge. We recently did a $100 swing trading challenge. We doubled it. Now, I decided to go, all right, let's do $500. Most new traders think you need millions or thousands or hundreds of thousands of dollars to make money from trading, when in reality, all you need is a solid strategy. So you could have $1 million, $1 billion in your account, but if you don't have a solid game plan, a solid approach, you're gonna lose money. So in today's video, we're gonna be looking at our entry, our exit, our full trade with a $500 account. So make sure you guys follow, and if you guys want to learn more about trading, check out our school. It's fantastic. It's called the Swing Trading Masterclass. We have private live streams, quizzes, lectures, a group chat, but more importantly, we actually teach you to trade. We have hours of video lectures. We have a group chat with like-minded individuals. We have everything you need to take your trading to the next level. So check it out down below, and let's have a quick word from today's sponsor. I know a lot of you are just getting started with investing, and one app that I've been using is called Moomoo. It's super beginner friendly, but still gives you pro level tools like live market data, easy to read charts, and news all in one place. And the best part, new users can get up to 60 free stocks when you open up an account with qualifying deposit. And honestly, that's actually why I tried it, and I've been using it ever since. Check out the link down below if you guys are curious, which is Moomoo. Moomoo is the broker that I've been using for the past 7 years. So if you guys want to sign up, you guys can get up to 60 free stocks, and they're the broker I'm using in this challenge today. So make sure you guys check them out. All right, enough with that. Let's jump into this. All right, so this past week here, we took one trade with our new $500 account. And here's the thing, guys, we made over $75, which from a $500 account, I'll take that any day of the week. I'll take that any day. I'll take that any week. The reason why is because, one, made great profit off $500, $75 in profit. I am not complaining at all. Two, we know the data. Historically, if you make 3% per month, you're in the top 5% of all traders in the entire world. So given that we made well over that 3%, we are looking good. Now, let's go ahead and pull up the stock here, and we'll talk about the trade that we took. Now, this is the broker we are using. The broker is Moomoo. They're the sponsor of today's video, so make sure you guys check them out. But why I chose them for this challenge is because of the charting, the scanning, and they offer something called fraction shares, where you can invest into companies and you don't have to have the full share price. So with a small account, you can really capitalize on that. All right, so the stock here was ticker symbol FOA. This is also known as Finance of America. Now, the company could care less about. All I care about is technical indicators. Technical indicators, looking at the charts, the indicators, the RSI, the MACD, the EMA lines, all that, and that's what traders pay attention to. Traders don't care about their revenues, the cash flow, the debt to income, stuff like that. That's where fundamental analysis takes over, and more long-term investors care about that. So with the stock here, we first noticed the upward trend, right? The stock has gone from $7 all the way up to, $30. Really, really nice move. As you guys can see, huge buying pressure out of this. And then it just kind of started selling off from 32 all the way down to about $18. And it formed a nice little trend line here, like this. And it wasn't 100% right on support, but it did work out relatively good. But we had those moving average lines, right? You guys can see this red line, which is a very heavy support for most companies. This is the 200-day moving average line. You guys can see in the past here, it's hit it once, twice, 3 times, and each and every time it's hit it, it's had really good buying pressure off it. So you guys can see the stock went from 25 all the way down to 20 in about a week span, selling off like crazy. Okay, so now what we did is we went ahead and we looked at the RSI. Okay, so we have an upward trend. It's hitting that 200-day moving average line. Right, it's trading right here at a 30 on the RSI, which the last time it was trading for that was back in this range on that 200-day moving average line, where we saw a good move. Okay, after that here, we went ahead and we went to a lower time frame. So let's recap. Stock had an upward trend, sold off down to the support of that 200-day moving average line, undervalued on that RSI. So going to that hourly time frame, you guys can see here that it was just really selling off like crazy, right? Went from 24 all the way down to 19, sold off here, as you guys can see. Now, for me, we threw an alert right above this. So if the stock popped up higher, we would be notified and ready to go in for an entry. The stock popped up, got in near around 21.50, keeping stops below 19, risking about $1 to make about $4. The stock popped up, and it did release an earnings. Now, normally, yes, I do not trade a stock through an earnings, but since we were already up, right? If we go ahead and we look, we were already up 6%. I moved my stop loss below about here, about 21 in that range, about near and around our entry point, to be honest with you. The thought process was this: holding a stock, right, through an earnings does increase the risk, but with a smaller account, I have a larger account, I was willing to be a little more risky with this trade. The stock then released a positive earnings growth, popped up to, the $25 mark, and now is just forming just this nice and steady trend line, just like that, as we can see. So we're going to just continue to hold this stock here through these earnings reports. Not through these earnings reports, but through this trend line. If it does dip down below this trend line, we'll just cover our profit. But as of right now, it's up at $75. And if we dip down, it'll be about $70 in profit if it doesn't go up anymore. So that's kind of the approach here that we took this past week. I hope you guys all enjoyed it. If you did, smash that like button, subscribe, and we'll see you guys in the next one. Like, follow, and take care.